Hey guys, there is a memo that has leaked online that is supposedly from Sam Bankman-Fried to FTX employees. This is it right here, which I want to go through, and this maybe explains a little bit more about what's happening right now with this situation. Timestamps in the description for all the different bits of news and the articles that I'm trying to source for you guys in this video. So check the description for those links if you want to see for yourself. Now, this may not be true, this may not be actually real, but it seems fairly real, and it was leaked to Kobe. So let's go through this and also what's happening with FTX as well, and TRX, which is Justin Sun's asset and blockchain. What's happening here is that he's potentially trying to start TRX trading on FTX so that people can essentially sell out of all of their liquidity and into TRX tokens, right? So if there's an exchange that can happen in TRX, and there is a possible path to actually be able to withdraw TRX from FTX, then people could withdraw that over to his exchange. And he's obviously wanting these customers, right? There's a lot of issues here. The first one is that TRX token trades at about 5 cents in the market. In general on other exchanges, it's now trading at around 30 cents or 29 cents on FTX, right? The price is massively different here because people have an opportunity to buy into TRX potentially and then withdraw it, right? So what they're doing here is essentially there's only a set number of TRX on the platform, right? So they can't put any TRX on to satiate that demand. And so there's probably a finite amount of TRX tokens on FTX that can be bought. And so what you're seeing is this massive price discrepancy. This now is the price of a potential ability to remove your whatever's left of your tokens and your balance out of FTX. Now, if you buy these, if you sell your other assets and your positions, and you buy these tokens at 30 cents, the only thing that can be done is to withdraw them over to Huobi and then sell them if you want to cash out. And obviously, you'll be selling at 5 cents. Maybe even lower, considering there's an amount, potentially hundreds of millions of dollars that will be transferred out and then sold to cash out. And so, you're getting cents on the dollar, right, in terms of what this is. But this is a lifeboat. The only other option is to just sit there and wait and hope a miracle happens, or potentially bankruptcy proceedings, which is cents on the dollar in a decade. And so that's what it is. Now let's get on to the memo, which has been leaked as well. Apparently this was from FTX to staff recently. Again, can't verify the truthfulness or the veracity of this, but we'll go through it right here. So the big thing for me is that Sam thinks that there's some sort of fundraise that is actually going to happen, which in my opinion is almost impossible. The only possible way that a fundraise happens is if Sam and FTX bundle in the US site as well. FTX US is a regulated business that has one-for-one assets. It's not insolvent, completely separate business that runs the FTX brand. That potentially is a profitable asset that someone would want to buy. So the only silver lining potentially here for FTX and the rest of crypto, to be totally honest, is that some group of investors are happy to pay for the debts and the liabilities of the international site and that company in order to buy the asset, which is FTX US. So FTX were making, if you look back at what FTT token was being burnt, you can do the calculations, and I think FTX International were making around $500 million a year in revenues from trading fees. Now, you obviously have to take out some business costs there as well. But, as an investor, that US version, is the US site's obviously not making as much as that. But the only silver lining is that, maybe they think if they can keep all of the traders on there, that they could actually just buy the US version and potentially have a payback here. No one's going to buy this asset for the good of the industry or anything like that. It's not how investors work. They will only invest if they see a potential value proposition and income stream from having to pay off all those liabilities of the international version. So this is SBF here. One could maybe say, if they wanted to be optimistic, that we have a lot theoretically in and or potentially for the raise. It literally doesn't mean anything more than good enough to cover all needs. So what he's saying here is he's not opening the position, but what he's alluding to is that potentially they have enough money from investors to actually cover all the needs of the existing clients, which according to reports is anywhere from kind of 6 to 10 billion, around that ballpark, right? Now, that is so much money and no one's going to put that in the bin, right? It's basically just burning $8 billion at that point. The only way they will actually do that is if they feel like the US company makes enough money to make that investment worthwhile and actually use those revenue streams to pay back that 8 billion that they've spent. That's the only way I can see this working. Whoever these investors are, you can see here, he's talking about Justin Sun. As one part of the potential above raise, we have had talks with Justin Sun. The DOJ and the SEC are investigating FTX now, so it looks like there is definite evidence of criminality here in terms of what SBF did as well, appropriating user funds. So it's a total mess. And the only way anyone would invest in this is if they actually have the asset of FTX US. These firms also took little hits as well. Either they have FTT token or they had some exposure, and everyone just gets out of it, right? So they take the loss. I think Wintermute or Genesis lost 7 million, right? So not a big deal for them. Multicoin took massive drawdowns in what they had. Amber Group as well, no exposure to FTX or Alameda, but they have significantly reduced exposure over the course of the week, right? So any long exposure that people were actually starting to build up because the price was actually starting to rise, just all out again, right? Risk off, everything out into cash, which is why you see all of these dumps in everything. Solana is a little bit different on all of these Solana ecosystem tokens because a lot of these were invested in and funded by FTX. And obviously they're all just going to be gone, selling out. Crypto Quant, actually see all of the assets that Alameda still have. This is only EVM networks right here. So ETH, Binance Smart Chain, Matic, as you can see. This dashboard here, FTX International still has $700 million worth of assets. The FTT token, which makes up the bulk, this is worthless if they tried to sell it, right? There's zero liquidity there, so difficult to sell. So that would be worth almost nothing. You have PaxG and US dollar here, Matic. These are definitely, could be sold. Again, very low liquidity and a big seller in the market, the price is obviously going to come down. Now, long-term investors might say, hey, we want to pick up some Link or Matic or whatever, but they're certainly not going to pay up a distressed seller, right? So that's how the market would work there. But we can see FTX US also has $107 million worth of assets. And it just shows you the discrepancy between the US version. The international version definitely is the one that made most of the money, which is why the US version may not be an asset that anyone wants to buy anyway, because it may not pay off the 10 billion that they need to stump up to bail out everyone on this platform. There are opportunities to make money in every market condition, of course. The problem for most people, and with the crypto space and prices and altcoins right now, is what's going to happen over the next 6 to 12 months, which is essentially no new capital in this space and markets not functioning well. So what I mean by that is, as you can see here, the excesses of what happened here. He's talking about FTX. This is Jesse from Kraken. VCs wrote blind checks. Why? Because revenues were strong. It's why FTX was making $500 million a year. They just said, well, we'll just put money in, and they didn't do any diligence on what was happening at Alameda and what they were doing there, right? Money to be made, so everyone wants that money, but they weren't asking the right questions about what was happening right here. It's the same in every single cycle, right? Now, what this means for altcoins and Bitcoin and Ethereum as well is that no new money in the space means that real product teams cannot raise funds for their businesses, right? The whole point of crypto and why you have these altcoins is because people have ideas for businesses. If you go down the list, right, up, past the top 20 or 30 coins, right, you have a list of businesses that actually want to do things, right? PancakeSwap, Uniswap, these are just exchange businesses, and they want to build decentralized infrastructure to help people actually get away from these centralized exchanges where you have to trust people that turn out to be potentially criminal, right? Other teams that need to sell their tokens that they have in treasury to fund their operations and to fund and pay developers now having a much bigger time, because if you go down the list, suddenly these tokens have dropped 50, 60, 80% in value, and their treasuries now are looking very thin, especially smaller businesses and apps that are trying to build infrastructure here. Their funding is now way down. Are they going to survive? Some really good developers and businesses may not survive right here just because of what one greedy person at the top did. I'll leave the research and links to everything down in the description for you as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.